Hello everyone, welcome to the Elliott Wave Forex.com YouTube channel. This is Henry. Today is Thursday, May the 5th. The time is 2 a.m. GMT. Today we're going to be talking about the Australian dollar US dollars. This is a 60 minutes chart. Now, so FOMC meeting is finally behind us. As expected, they raised the rate by 50 basis point. But I've been mentioning yesterday that all those jawboning by the Fed has been priced in by the market months before, and so it is quite common to see some sort of buy the rumor, sell the news event in which they raise the rate and then everything actually reverse. So in this case, you can see we've been the correlation has been that the indices went down and the US dollar went up and bonds went down, right? And that has been what we saw. So when finally they raised the rate and we got the that event, buying the rumor, sell the news, you got everything reversed. All right. So the reversal has been the indices rally, the US dollar sell off, right? And the question becomes, so have we actually made a major low in the indices, or have we made a major high in the US dollars, right? Is the trend has the trend changed dramatically now, right? Or is this only some sort of relief rally of some sort, right? It could be just a short squeeze or whatever you want to call it before the trend continues again. Now, in this Aussie dollar US dollar chart, we're gonna take a look specifically on this instrument. But remember, everything in the market is all correlated, right? So that's why if people only look at the S&P and trade only the S&P and only concerned about the S&P, they are missing the point, because everything is correlated, the whole market, right? And so looking at the multiple asset categories help us to figure out the entire market, not just Aussie dollars. When we are looking at the Aussie dollars, we are actually looking at the US dollars. We're looking at the indices as well. We're looking at the commodities and so on. So they are all interrelated. All right, so let's take a look here what we have. So according to discount, we completed with 1 at the low. This is the intermediate degree, right? This is the intermediate degree here. So what that means, then we are now in the wave 2. So just looking at the count here, 1, 2, that tells you that we are still eventually looking for the downside. So what does that mean? Eventually Aussie dollars is going to go down again, US dollar is going to go up again. So again, correlation wise, US dollar going up, indices going down again, and on, right? So then that means what we have is just a simple counter trend or short squeeze or whatever you want to call it, right? And the rally that we are looking at here, it could extend a little bit more. So I think give it a few more days maybe for all this rally to play out before we resume again. The downtrend in this case can go down again, right? Now the rally here, we are calling this SAWXY. Now the exact structure can change a little bit, right? So first of all, we need to understand that this key level here is not really the most important level, 74.59. The reason is the following. Let me zoom out and try to figure out this wave 1, because if we are in the wave 2, remember wave 2 is correcting wave 1, right? So the more important level is not this one, but is the beginning of wave 1 is what matters, right? So if we zoom out, so I put wave 1 here, this same wave 1 here we saw in the 60 minutes chart. That is our wave 1. So if this is a wave 1, then we are dealing with cycle that started from this peak, which is from April 5th, right? So the decline from the April 5th, it does look impulsive, right? It does look impulsive. So that's your wave 1. So now we're simply correcting this decline from April 5th in a three-ways rally, right? Or in a seven swing, whatever the structure may be. Now, remember what I said, this 74.59 is not the most important level. So why then we put it here? It's because we ran out of space in the 60 minutes chart. We don't want to show all the way back, all the way back from April 5th, because then the chart becomes too compressed, right? But April 5th is really the most important level in this case, which is the 76.61, right? Let me put it down here. 76.61 is the real important level, because if you are or if we are indeed in the wave 2, then that wave 2 is correcting this decline, and that wave 2 should not pass above 76.61. Now this 74.59 is not important, right? It's not important because 74.59 is somewhere here, right? It can break above here, before we finish 2. Now typically you don't want to see wave 2 that big either, because wave 2 typically, if you use retracement, ideally it should be between, let's say, 50 to 61.8. This is the most ideal area, but sometimes it can go all the way up to 76.4, right? And back to the 1 hour time frame, we are ending the first leg. Now again, like I've been saying, the structure of this rally, it can get into a couple of different options. It can be a 1, 2, and then this is 3, 4, 5, right? It can get into a 5 ways up, 1, 2, 3, 4, 5, ending A. Does it change anything? No, right? And then a B, and then a C. So a 5, 3, 5 to end the 2 before going down. Can it happen? Absolutely. Do we know for sure which one? No, we don't. Now nobody will know for sure which structure is going to be. Is it a 5 ways up, or is it a in this case it's a 3 swing up ending a W, right? But it doesn't really change anything, right? So a lot of people is getting too detailed in all those little thing that they miss the whole point. The whole point is not catching the perfect structure of the move up as a 535 or 333, but rather understanding that, okay, which cycle are we correcting, and then okay, what is really the expectation? Is it bearish or bullish? So the most important thing when we look at this is to understand, okay, this rally is still considered as a counter trend, and understand that this rally is in fact correcting the cycle from April 5th. Now the exact structure of the rally matter less. It could be WXY, ABC, whatever it is, but that rally eventually is going to complete, and then it can go down again. So if this is WXY, then what's my target? For now you don't know, because you need to wait for the W to and X to finish, then you can measure the extension and then get the 100% extension for the target on the upside. Now if somebody says, I don't care, give me a level, even if you do not just give me approximate level, then you use retracement, right? You use retracement, going back here, retracement, you can go with the 50%, 76.4% area as a possible area. And another thing that a lot of newbies get into trap about is they think everything is based on level. So just give me a level, and like nobody knows the exact level, right? It's not like a magic where you can know the exact level where it should be ending. So traders always play with areas, right? Areas. Because they understand the possibility, like areas. They never deal with exact one level, right? They always deal with areas. So this is the area, if you want to know roughly right now, between 50%, 76.4%. If you want to more precise areas, lower, like sort of like a smaller areas, then we have to wait until we finish the first leg and the second leg to measure the third leg target on the upside. Okay, but eventually what this is saying is we should be expecting more upside, right? so that Aussie dollars can continue to correct, right? That's in the shorter cycle. But once that correction is finished, then we can go down again. All right. So if you want to get regular updates on Forex, commodities, or stock market, you can try our service. We have 14 days trial. And I'll see you all again. The link is provided in the description. I'll see you all again tomorrow. Have a nice day, everyone.